Hello everybody. Hope you all are doing really well. This is CA Agrawal, your faculty for ACCA, AA, AAA and law subjects. And today we are going to conduct a very important session of the last question for chapter number 7, which is planning, materiality and risk. And my dear friends, this chapter is one of the most important chapters of your whole ACCA syllabus, because generally the first 50 marks question that is asked in the examination is from this particular chapter only. So I request you all to stay connected throughout the session and interact during the session so that we can complete this question in a very efficient manner. So very good evening everybody. Please confirm me if I am audible and visible. Please confirm me if I am audible and visible. Yes. Please confirm if I am audible and visible or not. Yes, please confirm me if I am audible and visible or not. Yes, please confirm me if I am audible and visible or not. Yes. Okay. Very good evening. Very good evening. Hello. Yes. Good. Thank you so much. So very good evening everybody. Hope you all are doing really well. I am CA Supreet Agrawal, your faculty for ACCA, AA, AAA and law subjects, and today we are going to solve the last question of our syllabus for chapter number 7. My dear friends, when we talk about chapter number 7, this is very important for you, because the first question that is asked in the examination, the section A question, is generally asked from this particular chapter only. Right, now let's go to the last question, which is Connolly Company. My dear friends, like always, I would request you to have a blank piece of paper and a pen or a notepad in front of you so that you can make certain pointers, and once you draft your answer, then only we are going to discuss it, and then we are going to get into the details of it, and we are in fact going to read the answers also. So now when we talk about the Connolly Company, it is 1st July 2025. It is 1st July 2025. We do not know till now whether it is a year beginning, year end or what. Okay, you are an audit manager in Davies and Company. So this is the firm. Okay, responsible for the audit of Connolly Company, a listed company. Okay, so this is a Connolly Company, a listed company. Okay, operating in the pharmaceutical industry. You are planning the audit of financial statements for the year ending 31st July 2025. Okay, so we are at 1 month before year end. 1 month before year end. Okay, now the following exhibits provide information relevant to the question. Partner's email, an email which you have received from Ellie Stone, the audit engagement partner. Okay, then background information about the company and its activities relevant to audit planning. Okay, the notes from meeting, summary of business development discussed at a recent meeting between Ali Stone and company's finance director also. Okay, then selected financial information also, projections to 31st July 2025 and comparative financial information. Okay, now this information should be used to answer the following requirements. Number 1, respond to the instructions in the email from the audit engagement partner. Okay, professional marks will be awarded. Great. Now to audit manager from audit engagement partner, audit planning for Connolly and Company 1st July 2025, that is 1 month before the year end. Hello, I have provided you with some information in the form of number of exhibits which you should use to help you with planning the audit of Connolly Company for the financial year ending 31st July 2025. Based on the analysis I have on this industry, it is appropriate on this industry as in the pharmaceutical industry, right? The pharma industry. Now, it is appropriate for overall materiality to be based on the profitability of the company. So, materiality needs to be based on what? Materiality needs to be based on what? Profitability. Okay. As this is a key focus for investors and providers of finance. Okay, now using the information in all exhibits, I require you to prepare briefing notes for use, in which you, number 1, evaluate the significant business risk, not audit risk. Okay, not audit risk, business risk. Yesterday also we solved a similar question to be considered in planning the audit of Connolly Company. Then evaluate and prioritize the significant risk of material misstatement to be considered in planning. Now a lot of students does this, that they evaluate but they do not prioritize. Evaluate as in what? You have to mention what is the risk, you have to mention why it is a risk. Okay, all of these things are very important. And then prioritize also. When I say prioritize, as in you have to decide the sequence, that which is the biggest risk, then what are the sequence of the risk. Then decide the principal audit procedures to be performed in respect of the acquired Cold Comfort's brand name. So similar question we have solved yesterday also. And the total development intangible asset recognized. Okay, so you have to tell the principal audit procedures for that. This is for 5 marks each. Okay, so first one is of 10 marks, then 14 marks audit risk, then 5 for this, and then using exhibit 3, discuss the ethical issues relevant to the audit firm, and recommend appropriate actions to be taken. Okay, ethical issues. Number one, background information. Connolly Company is a pharmaceutical company developing drugs to be licensed for use around the world. Products include medicines such as tablets and medical gels and creams. Some drugs are sold over the counter at pharmacy store, while others can only be prescribed by use by a doctor. Okay. Products are heavily advertised to support the company's brand names. In some countries, television advertising is not allowed for prescription of drugs. Okay. The market is very competitive, encouraging rapid product innovation. So this is one point that you need to mention. New products are continually in development and improvements are made to existing formulations. 4 new drugs are in research and development phase. Okay. Drugs have to meet very stringent regulatory requirements prior to being licensed for production and sale. Research and development involves human critical trials. Okay. So it involves human critical trials, clinical trials, not critical, clinical trials, the results of which are scrutinized by the licensing authority. It is common in the industry for patients to be acquired for new drugs, and patent rights are rigorously defended, sometimes resulting in legal action against potential infringement also. Okay. Now notes from meeting. Meeting attendees: Ali Stone, audit engagement partner, Davies and Company; Maggie R, finance director, Connolly Company. Okay. Connolly Company has approached its bank to extend its borrowing facilities. Okay. Bank to extend its borrowing facilities. An extension of $10 million is being sought to its existing loan to support the ongoing development of new drugs. So, extension of $10 million, that's a big amount to the existing loan, in addition to the existing loan, right? So, this becomes a little important amount for us. Okay. For the audit risk, of course. Our firm has been asked by the bank to provide a guarantee in respect of this loan extension. Oh my God, ethical issues. Okay. Now, in addition, the company has asked the bank to make cash of $3 million available in the event that an existing court case against the company is successful. Okay. Very important point for significant audit risk also. The court case is being brought by an individual who suffered severe and deb debilitating, okay, debilitating, sorry, my tongue got slipped. Yes, debilitating side effects when participating in a clinical trial in 2014. Okay, 2024. In August 2024, Connolly Company began to sell into a new market, that of animal health. This has been very successful, and revenue from veterinary, pharmaceuticals and grooming products for livestock and pets amounts to approximately $6 million. Oh my God, very good. But it's a new thing. Okay, another, because it is in the current year only. See, this is in the current year only. Now, another success in 2025 was the acquisition of Cold Comfort's brand from a rival company. Products to alleviate the symptoms of coughs and colds are sold under this brand. The brand cost $5 million and is being amortized over an estimated useful life of 15 years. Connolly Company's accounting and management informations are out of date. Oh my God. This is not considered to create any significant control deficiency, but the company would like to develop and implement new systems next year. Okay. Management has asked our firm to give advice on the new systems, as they have a specialist in-house knowledge in this area. Oh my God, ethical issue. The finance director will send some key financial information discussed at the latest board meeting before the end of the week. Okay. Now, selected financial information: revenue and operating profit, operating margin, earnings per share, net cash flow, and research and development cost. Total development intangible asset recognized at the year end is there. So it must be, this is the previous year, this is the current year. This is the previous year, this is the current year, right? That is all. Then total assets and gearing ratio also, last it was 0.9, this year it is 0.8. Now let's go to the requirement again. I'll give you 5 minutes for each requirement and then we will be moving further. So first requirement is evaluate the significant business risk to be considered in planning the audit of Connolly Company. So here the first paragraph that we can see is majorly towards what? It's majorly towards the business issues. The notes from meeting paragraph generally tells us about either the business issues or the audit issues as well, right? So let's try to complete this one first. Evaluate the significant business risk to be considered in planning the audit of Connolly Company. Let's try to complete this. Take 5 minutes. Please go through each and every point that is there and do let me know what is your answer. Do not write the full answers. Just make the markings of what you will be writing. Give more time to thinking about the particular answer. Once it's done, please write done on the chat box so that we can go ahead, discuss this question and then read the answer as well. Yes, so I hope the time is complete. Now, when we talk about the 10 marks question, you should evaluate the significant business risk. So you should ideally try for 8 to 10 points. Now let's discuss about what points we can mention over here. Okay. So number one point that we could mention is licensing. Okay, could be one. Licensing could be one point. Okay, licensing, stringent requirements are there for licensing. Okay. Then we can mention that, yes, then we can mention that the products are heavily advertised, but there are certain restrictions also, so we could face the penalties also, that could be one. Okay. Rapid innovation, so skilled labors are required, that could be one. Okay. Stringent regulatory requirements for getting the license, it involves human trials, so there could be repercussions from human activists also if there are any reactions or any long-term effects. Okay. Legal actions could be there towards potential re-infringement could be there. Okay. Cash flow issues could be there because there are borrowing facility issues, right? You are trying to borrow more, you are also asking the firm to back it up. Okay, via guarantee. So diversification of products could be that we are entering into newer markets also, that could be one. Information systems are outdated. Okay. Heavy investment on acquisition of newer companies. Okay. Yes, all of these points are very, very important. Now let's read what they have written. They have written licensing of products, right? We have written patent infringements, yes, we have mentioned. Advertising regulations, yes, we have mentioned. Skilled personnel, yes, we have mentioned. We have to explain in the similar length? No, you have to explain in 2 to 3 liners only maximum. Diversification, rapid growth, yes, we have discussed about what we will be writing here. Cash management issues also, yes, we have discussed about it, right? Further bank finance, we have, yes, mentioned about it. Court case and bad publicity, yes, we have mentioned about it. Risk of over trading, now this is something that we have not mentioned. Let's see what is there. The fall in operating margin and earnings per share is a worrying sign for shareholders. Although for the reasons explained above, this may not be the state of a long-term trend, as several events in the current year have put one-off pressure on the margins. However, there could be a risk of over trading. Okay, that is one, that is important, but we have forgot to write it, that is why I'm marking this as important. Hope this is clear. Hope this one is clear. Yes. Okay, now let's go to the second question. Let's go to the second question now. Now let's go to the second question. Let's go to the second question. Second question is what? Oh, that is why we have saved. Yes, that is why we have saved it also, so that we do not lose control of it. Yes, the second question is what? The second question is very, very simple. Evaluate and prioritize the significant risk, not business risk. So this is audit risk of material misstatement. So risk of material misstatement to be considered in planning the audit. Same question that we have solved yesterday. So let's try to solve it today. Okay. So take 5 minutes, draft your answer, then we will be discussing about it. Yes, guys, I hope it's done. Yes, I hope it's done. So what you might have written is, see, when we discuss about the risk of material misstatement, so we have to go via materiality. We are not looking for operational issues. We are looking for risk of material misstatement. So here, there's a clear indication of how you need to calculate the materiality. So they have said that materiality needs to be calculated based on the profits, right? Based on the profitability. Let's see what is the profitability. Okay. So the profitability is operating, okay, right, operating profit, this is the one, right? If this is for current year, then we have to go for 5 to 10% of it, 5 to 10%, right, 5 to 10% of it, 5 to 10% as in how much? 5% to 10% is how much? So we can go for 8100 into 5%, so that is 405 as in point 0.4, 0.4 million, and 10.8. Okay, so we can take a rough of 0.5% because this is very important for us to understand. 0.5 million, not 0.5%, 0.5 million. This is very important for us to understand that this company looks at a stage where they are facing heavy risk, so that is why we cannot take the upper limit, we have to take the lower limit. So 0.5 is a reasonable basis now. Okay, so that is the materiality. Now when we look at other pointers, so what we have to look for is, what are the potential financial impacts that the company could face. So number one being, where are the numbers here? Let's check. That is the core criteria that you need to follow. You need to identify the numbers first, okay, and see what are material. So see here, an extension of $10 million is being sought to its existing loan to support the ongoing development. This is one risk because this is material. Is it above $0.5 million? Yes. So this is material. You have to mention this point. Then when we talk about making the cash available of $3 million, again you have to mention this because this is also material. Okay, then when we talk about the revenue of $6 million, see, although you will be mentioning it as a positive point, so it does not need to be mentioned over here, but it needs to be mentioned as part of some information. Okay, then when we talk about the brand cost of $5 million that has been acquired and at an amortization of 15 years, so we have to first of all check whether this particular brand is actually costing $5 million or not, whether the accounting has been done appropriately or not, whether the recording is done appropriately or not. Second, whether it meets the criteria of the intangible assets or not, and then whether amortization is happening correctly or not. So 3 to 4 points would come from here. Okay, then okay, net cash flow of the company is going down, so you have to mention that also. Okay, okay, these are the points that you need to mention. Now let's check what they have written. They have written the zero point 0.4 million and 0.8 million, 5 to 10%, final is 0.5 million. Okay, revenue trends, revenue is going to increase, there's a presumed risk of fraud in revenue recognition, so you have to mention that. The net effect is the increase of 5.3%. Okay, there's therefore a significant risk that revenue from the new business is overstated, possibly to hide the decline also because we have to show the positive results. Then management bias could be there because we have to raise finance and we have to see that the financial statements are showing the favorable position. Then research and development cost capitalization, we have also discussed about it, $10 million, whether it meets the criteria or not. Development costs are capitalized only after technical and commercial feasibility of the asset, that needs to be checked. Then when we talk about the court cases, so we discussed about that this indication of outflow of $3 million tells us that there could be unsuccessful case result also. If there is probable outflow of economic benefit which can be measured reliably, a provision should be recognized for this, which we might be missing right now. Then segmental reporting, so we are entering into a new product line also, so there would be changes in the segmental reporting also. As the new product area has been successful and contributes 15% of the to the revenue, it could be regarded as a significant operating segment which we might be missing now. And development cost amortization, so we check the whole financial statements, right? We have discussed about the amortization of the development cost also, brand amortization also, the $5 million one. Then we have discussed about the patents amortization also. So with this we have completed this particular part also. Now Now, when we talk about the principal audit procedures for Cold Comfort's brand name and then the development intangible assets. So these two are the equations that we have already discussed yesterday only, in the last question only, the third question that we have solved. We have discussed the same point, not similar point, the same point there also. So let's quickly read what all things they have written. Board minutes points, review the board minutes, okay, agree the cost to the financial statements and the ledger, obtain the purchase agreement, discuss with management the useful life is appropriate or not, okay. Then these are similar pointers, a little repetition of it. Market research to confirm the existence of a revenue stream from this, whether it can generate the cash for the company or not, and whether there are any indicators of potential impairment or not, whether the impairment testing has been done, what is the result of that, and recalculate the amortization expenses. Similar points. Development intangible assets also. So intangible assets, obtain a schedule of the drug development showing the makeup of the $50 million balance and movements during the year. Agree amounts capitalized to supporting documents also, whether the amount is appropriate or not. Compare actual development cost incurred for drug to budgeted cost, whether the budget has been increased, if yes, whether there are reasonable approvers, reasonable reasons for that. Review results of clinical trials also, and whether the licensing could be gained from that. Review the legal correspondence relating to the court case also arising from last year's clinical trial. Obtain a copy of revenue and cash flow forecast in support of $10 million additional loan also, that it is viable, it is feasible for the company to invest such an amount on this. Based on revenue projection for each drug, calculate the number of years revenue needed to recover the capitalized cost for reasonableness. And for the drug most recently made available to the market, compare actual sales volume to the estimates and whether it is feasible for the company to get more investments for this particular drug. Now, the last question. And this is one of the important questions also, my dear friends. When we talk about the last question, it is one of the important points as well, the ethical threats. Let's read the clear wordings of it. Using exhibit 3, discuss the ethical issues relevant to the audit firm and recommend appropriate actions to be taken. So not just the ethical issues, the relevant appropriate actions that needs to be done, that needs to be recommended also. This is for 6 marks. So 3 ethical issues, 3 resultant actions, recommended actions. So please complete this question in 5 minutes, then we will meet again. Yes. Yes, I hope it's done. I hope it's done. So while reading the question only, I have marked at two places that these two are the ethical issues, right? Let's figure out where they were mentioned. Mm, yes, this loan guarantee, number one. Then information system. Management has asked our firm. These two are the ethical threats that needs to be mentioned. But sir, the question was of 6 marks, right? So we need to mention at least 3. Who said it? So you said it. I just gave you the hint, but if you're looking for the third ethical threat that is not present, then you cannot mention it. But then you have to justify your answer for 6 marks. So you need to give more details into the particular scenario that you have identified. So why is this a particular ethical threat? Because this results into self-interest threat. Self-interest threat. And my dear friends, this is one such risk if you give guarantees. So this is such big financial interest that there is no particular safeguard for that as well. So you might have to resign from the audit client if you do this. Then when we talk about the second point, which is management has asked a firm to give advice on the new systems. Now this might result into self-review threat, and what might happen is if you give this particular services to the client, which is a non-assurance service, you might end up assuming the management responsibility also. So that is why this is again a very big threat. And since this is a particular listed entity that we are talking about, we cannot provide it. There's no safeguard attached to it, right? So let's see what their answer says. So it is number one, the bank has, let me read it fully, right? Because the drafting of this particular answer is very important. The bank has asked our firm to provide a guarantee in respect of the bank loan which may be advanced to our client. The provision of such a guarantee represents a financial interest in an audit client. It creates a self-interest threat because the audit firm has an interest in the financial position of the client, causing loss of objectivity when auditing the financial statements. According to ISBA's Code of Ethics for Professional Accountants, if an audit firm guarantees a loan to an audit client, the self-interest threat created would be so significant that no safeguards could reduce the threat to an acceptable level unless the loan or guarantee is immaterial to both the audit firm and the client. In this case, the loan would be material as it represents 5% of the Connolly's total assets and would also be considered material in nature because of the company's need for additional finance. Okay. Now, Connolly's request for our firm to provide services on the new accounting and management information systems to be implemented next year. If the advice were given, it would constitute the provision of non-assurance services like we have discussed. The code has detailed guidance in this area and a specific requirement in the case of a public interest entity also. Okay, the code states that services related to IT systems, including the design or implementation of hardware or software systems, may create a self-review threat. This is because when auditing the financial statements, the auditor would assess the systems which they had recommended, and an objective assessment would be difficult to achieve. Correct? In the case of an audit client, which is a public interest entity, the code states that an audit firm cannot provide services involving the design or implementation of IT systems, which form a significant part of the systems of internal control over financial reporting, or which generate information which is significant to the client's accounting records or financial statements on which the firm will express an opinion. Therefore, the audit firm should not provide a service to give an advice on the accounting system also. Okay, these ethical issues should be discussed with those charged with governance of Connolly, and the reasons why the audit firm cannot guarantee the loan or provide the non-assurance services to the company explain. Now, see, there is a beautiful thing that has been done in this question, and that is very, very important for you also to do in all of your section A 50 marks question, is that provide a conclusion. That is very, very important. So Connolly faces a variety of business risks, some of which are generic to the industry in which it operates, while others are more entity specific. A number of significant risk of material misstatement have been discussed, and the audit planning must ensure that appropriate responses are designed for each one of them. The purchase of new brand and capitalized development costs will necessitate detailed testing also. So with this, we have concluded the issues also, including that we have also mentioned something about the two ethical issues, and then we can conclude our answer. Now with this, we have completed the questions of chapter number 7 as well. Now we can meet again tomorrow and we can start discussing about chapter number